Brett Sifling, investment advisor, representative at Gerber Kawasaki, and Lee Munson, chief investment officer, Portfolio Wealth Advisors. It's great to see you both. Lee, I'll start with you. I'm waiting to hear from Disney this week. I mean, obviously they have their investor meeting, their annual meeting. What do you think happens to Disney? The theme parks could be in jeopardy.
Oh, I think the theme parks is a story of Disney, and I know that we want to talk about Disney Plus and streaming, but as I think I've told you before here that if I could split Disney up into theme parks and then everything else, I would, and I would buy the theme parks. It's their cash cow. It's a thing where they have the pricing power. I mean, Tokyo Disneyland was closed for 2 weeks. I'm supposed to be going to Tokyo in May, and the kids are saying, are we going to go see a Japanese Mickey Mouse? I think that is the most critical issue. And if they have to close these theme parks stateside, I think it's going to make real pressure on the bottom line earnings. Because again, Disney Plus, we're not out of the woods. It's not a massive place of revenue. It costs a lot. The theme parks are cash cow. You take away a cash cow in a bearish market like this, you're toast.
Well, you make a great point because it's 40% of Disney's business, basically, right? The theme parks. Brett, Tokyo, Shanghai, Hong Kong have all been shut down. We're watching Florida and also California here in the States. But when we talk about numbers that are expected, tell me about Disney Plus, because if they're going to start to lose money on the theme parks, they have some high expectations for Disney Plus. And I'll tell you, $26.5 million in December, $28.5 million in February. They only added $2 million in 5 weeks. That's what people are asking. Are they seeing slower growth now for Disney Plus?
Well, they're definitely having big numbers for Disney Plus, and I was at the California parks here this past weekend, and it was booming. I mean, you got to book the new Star Wars ride 1 minute before you get into the park just to get in alone. But Disney Plus is really going to be the growth driver, in our opinion, over the next 5 years. And this direct-to-consumer unit, I think, will really start to pick up, especially with this coronavirus outbreak. We have people sitting at home, and this pent-up demand has to go somewhere, and it's going to go to Disney Plus, Hulu. People are going to be streaming, and they're going to be watching Disney movies.
Yeah, and I don't disagree, Brett, but I will say one thing that Needham had some concern about, Netflix in particular, and that they might not see the international growth because of the coronavirus. Brett, what do you make of that commentary from Needham about Netflix?
Yeah, well, Netflix has become a staple in pretty much every home here in the U.S., and I do think that they have a lot of room to grow internationally, and I think it's more of an opportunity for these streamers rather than getting hurt by some of this virus outbreak. People are going to be sitting at home. They're going to be, a little afraid to go out. It just depends, as we see this data come out and we see consumer behavior, whether it changes dramatically or just slightly. I think either way, it's good for these streamers.
Right. And, Lee, what happened? First of all, Bob Iger steps down as CEO. He keeps this role, right, chairman. He's going to be a creative role. He takes Bob Chapek, who was the head of the theme parks, puts him right into the new role. It would just seem so sudden, didn't it? This, as the stock's been down, it dropped over 20-30% since this change happened. What's really going on with Disney, and should the shareholders be worried?
Oh, I think you should be worried. If I were Iger and I saw the coronavirus, the first thing I would do is cash in my options and say, I'm out, baby. Let's ring the top of the cash register. I think him leaving is basically a signal to top tick that stock, because now you have to go forward and you have to establish that it wasn't him. It was really something else. And you know what I find with corporations? They're made of people. So now you don't have the leader. Now you don't have the Jedi Yoda master leading this. And also at the same time, you're having some real difficulties getting these movies screened and released in China. So I think all these things, you can talk as much as you want about Disney Plus, but the bottom line, you're going to see it in the price of this stock. They're going to know that 40% has to do with theme parks, and you don't have your great leader. I think this is going to be a problem for Disney. I think it's going to be a multi-year problem. And for all those people who've been paying a high multiple for Disney, strap in. We'll see how it goes. I could be wrong. I don't know. But let me put it this way. I'm trying to give Disney my money, and I'm finding it very difficult to do.
Brett, I want to hear your opinion because, first of all, Bob Chapek is they've worked in cahoots for many years. They have a great chemistry between the two of them. So I don't know if people are upset that Iger has moved on to a different sort of role, but it is a changing of the guard, coupled with the movies we just discussed about Mulan not being able to go into China right now. But the movie, year over year, it's almost impossible. Forget about coronavirus. It was next to impossible to try and take over that monster 2019 year that Disney had.
Yeah, I mean, first of all, Iger's still there till December of 2021, and him and Chapek work very, very closely together. And, you know, to the other guest's point, you know, the cash cow of Disney right now is the theme parks. And that's really what Chapek has, you know, grown up in his role there at Disney. So I think that he's really going to, one, take that to the next level, but also, you know, this direct-to-consumer level as well. And so, yes, it does suck as an entertainment business to not be able to have people go to your movies and see the blockbuster hits like Mulan and not be able to go to the parks. But, you know, this is a very short-term concern. You know, maybe over the next 3 to 6 months, we see this work through their, you know, earnings. And then eventually this could be an amazing opportunity over the next 3 to 5 years.
I see. Okay. Well, thank you both. I really appreciate it. Great discussion. Thanks to our panel, Brett Sifling, investment advisor, representative at Gerber Kawasaki, and Lee Munson, chief investment officer, Portfolio Wealth Advisors. Thanks to you both.